do you think the president wants to fire Jay Powell if, as Laura Messer was saying, perhaps ironically, he is sort of doing everything he can to keep inflation in check with the tariffs that the president has instituted? So what's he trying to do?
That's a great question. The high-level reality is Trump wants rates much lower and wants the Fed to do something that they don't think is good policy for just the reasons you said. He could fire Powell in some way. He can keep jawboning. He can replace Powell in May with a dovish nominee. It's mostly the same. He wants the Fed to bend to his will. If they do, his will is to cut short rates a lot. Cutting 150 basis points, for instance, would save the government $100 billion and reduce the deficit. I get the math. But a Fed who sets policy based on the president's will is no longer independent. That sort of Fed would hurt the dollar badly, as investors here and abroad would not expect the Fed to conduct policy as even-handedly, and expecting more debasement of the currency. Inflation expectations would rise as a weak dollar and easy monetary policy would stimulate asset speculation and perhaps turbocharge real economic growth. That would cause the long end, Treasury yields, and mortgages to rise, perhaps a lot. That wouldn't be what Trump wants. So his next step might be to ask the Treasury to intervene. On July 30th, the Bessent Treasury is scheduled to report issuance plans and updates to the Treasury buyback plan for the second half of the year. If Trump wants to suppress yields on the long end, he could instruct the Treasury to sell fewer long-term bonds and or increase their buyback program to retire existing bonds and fund the government with many more bills. A 25% decrease in bond issuance would be the equivalent impact of QE from the Fed running at its largest monthly rate ever. So that would control bonds. Bonds would be controlled. Stocks, gold, and Bitcoin would likely rally consistent with what happens in an emerging market economy, and the dollar would get crushed. Will this happen? We'll see, but July 30th, we will know.
Andy, it's Karen. Thanks so much for being on. It's an interesting take on what would happen with the long bond. So that sounds like actually, would you not want that to, let's say that he did all of those and the long bond actually is tame. How long can that hold together?
As long as they continue to starve the market for duration, the lack of supply versus real demand, there's still demand for Treasury bonds, will keep yields low. It's not necessarily good for the economy, as it'll heat up inflation and turbocharge growth, but that could be done.